Welcome to Financial Investing Radio, where you'll learn the secrets for consistent, high-probability returns in the financial markets for additional income to change your life. Grant applies consistent, high-probability trading systems for the financial markets. He's only recently started sharing these tried and true market secrets. As a gift to listeners, Grant is offering his roadmap to high-probability financial control. Go to financialinvestingradio.com and download yours today. Now, here's your host and trading veteran, Grant Larson.
Hey everybody, this is Grant Larson with another episode of Financial Investing Radio. Okay, so Bitcoin. How do you spell that anyway? All right. You know, there's certainly a lot of talk about Bitcoin in the markets. Now, one of the things about, the whole cryptocurrency things that can really be a challenge is the liquidity around it, right? You put in an order at a certain price or a certain location, and it can take time and therefore slippage, meaning what you asked for isn't necessarily what you're going to get. So those are some of the challenges around some of the cryptocurrencies, Bitcoin being one of them. And of course, while the feds work out their regulatory magic, I believe there are still opportunities to trade these currencies, and you can use some key trading signals. But before I get into that, I wanted to talk a little bit about fear. And what does fear have to do with Bitcoin? Well, from what I've seen, fear comes down to correlations. You see, some people are looking for correlations with Bitcoin. I know I've been looking for correlations with Bitcoin. So let me share a few of those with you, right? I've seen some people propose correlations between Bitcoin and the VIX. You're probably wondering, if you're not an options trader, what's the VIX? I thought VIX was like a vapor rub you put on your chest, when you got a cold. No, this is VIX. And as you may or may not know, the VIX is an indication of anticipated fear in the market, right? So in general, as the VIX goes up in value, then the market, typically or generally goes down. It's not 100% inversely correlated. Now, there's a whole other discussion on whether the VIX is trustworthy, but that's outside of this conversation. For our purposes here, we're looking at Bitcoin and VIX, and some have proposed that as the VIX goes up, meaning as there's more fear in the market, then Bitcoin goes down. That's interesting. All right. Well, what other correlations are out there? Right? Are they all fear-based? Well, not necessarily. So in some cases, I've seen other people propose correlations between Bitcoin and the Dow Jones Index. And still others have proposed correlations with, other currencies, such as the dollar, like, say, the dollar ETF called UUP. And I've even seen some people propose correlations between Bitcoin and gold, like GLD. So what is it, right? Is there really a correlation between all these? So one of the things is I was looking into the correlations on this, and I was thinking, is it really a fear-based, what is it that's really driving this? I'm looking for a good strategy, right, for the cryptos and for Bitcoin. So as I went on the journey to discover some of that, one of the things that, if you've never looked into any of those, active cryptocurrencies, you can go to places like coinmarketcap.com, all right? Now, what you'll see on there is a whole list, of course, of currencies out there. But as you think back to those different instruments that I've mentioned, right? Dow Jones, the dollar, gold, even the VIX. And if you were to put up a chart of Bitcoin and compare it to a chart of the VIX or of Dow Jones or of the UUP ETF or of gold, what you'll see is that there are periods of time where these are correlated. And you can see how someone pulled out, that conclusion, right? They looked at a period of time and said, all right, then I can see how these lined up, either directly correlated or inversely correlated, meaning either positively or negatively correlated. And you can see that. But I find a very interesting site. It's called SIFR Data, SIFR Data. And it's a place where you can see the correlations between the cryptocurrencies and, equity-based instruments such as, SPX, VIX, and other things. What they do, and go to the site, right? It's SIFRdata.com. SIFRdata.com/cryptocurrency-correlation-matrix. Man, if you can't follow that, it'll be in my notes on the podcast, all right? Go check that out. Kind of a cool matrix there, right? You're able to see these correlations that they pull out. Obviously, it's all based on price movement, and it gives you the strength of the correlation, whether it's the strength of the positive or the negative correlation. So it's interesting to do your own analysis on that. Now, as you examine that site, looking at the relationships that are plotted, obviously you'll see some that are higher, positively correlated with Bitcoin, and some are lower. But, what's interesting is that there's not a strong, sustainable, over time, positive or negative correlation between Bitcoin and stocks or stock indexes. Although, I mentioned there's certainly periods, right? You can, of course, see where it gets overlapped during periods of time. But one of the things that's really noticeable is if you look at that matrix, right, of the index, of the matrix that they have on there, you'll see there's obviously higher positive correlation between Bitcoin and the other cryptos. No real shocking surprise there. Now, I happen to be looking at an article, and it's on a site called Cointelegraph.com. And what they do is they were talking about their Bitcoin correlation to the stock market. And in that particular article, there's a gentleman from Fundstrat. His name's Tom Lee. He's quoted. He made the following statement, right? His conclusion after he'd studied this for a while. He said, hey, and I'm quoting him, cryptocurrencies have their own economy based on activity on blockchain. Equities have their own economy based on earnings per share multiples. The institutional overlap is essentially zero. Okay, end quote. So I think from what I've seen in my own research, when I stumbled into what he said, I was like, yeah, that confirms my understanding. So I said, all right. So instead of looking for correlation, what if you approached Bitcoin and other cryptocurrency trading using some basic technical analysis, right? Could you in fact find some highly probable locations to trade? So I did some work on that. I went and did some back testing, and I set some things up where I found some probable locations using certain technical settings. And it was fascinating. It's like, okay, all these years that I've been doing technical based analysis when I'm making my investing or my trading decisions, I pulled that into the Bitcoin environment, started to analyze that, made a few tweaks because obviously the volatility is different, a few things like that. And I was surprised to see that some fundamental technical analysis was actually holding up better than expected. Very interesting. So I'd be interested to know what you've found out, if you've tried that and what your experience has been as well. I think there's a lot of opportunities over in the crypto space to go do that, and leveraging your skill set that you've already developed into a place like that obviously is going to benefit you. So you're not just throwing money casually at it and hoping that it works out for you, but rather, pick those periods of time and those locations where it's higher probability, so it's not a gambling exercise, but more of an investment. All right, everybody, thanks for joining, and until next time, let me know what techniques you're using for your Bitcoin entry and exit locations.
Thank you for joining Grant on Financial Investing Radio. Remember to subscribe and leave feedback. Don't forget to download your free roadmap to high probability financial control before you make an investment decision. Visit financialinvestingradio.com now.